Welcome back, folks. I am John Najarian, and this is 3 at 3. In fact, it is the final 3 at 3 or for the week. It is the 20th of October, which means it is a regular expiration. As you know, we have expirations every week these days, but a regular monthly expiration is the third Friday, unless that happens to fall on a holiday. So this is that third Friday in October. So 10/20/23, almost in the books for the day. We're going to talk about unusual activity, show you how some of them worked, and then address some of the new ones that have hit just today. So with that said, let's get started. I thought this was an interesting chart. And as you know, I don't show you a lot of charts, but this one in particular was interesting because if you look at it, this is Bitcoin in blue and the TLT in red. So as you can see, the TLT just since basically mid-March is down some 21%, which means rates are up, because you guys know when the TLT is down, when bonds are down, that means interest rates are up. And that tells that story pretty well. A lot of folks didn't think that Bitcoin would do so well if we had interest rates going up. Why? Because as an alternative, you remember that phrase, TINA, there is no alternative. Well, it became a bigger and bigger alternative as the TLT and as the 10-year rates pushed higher and higher to multi-year, multi-decade highs. And of course, touching 5% or so just recently for the 10-year. Well, that tells you a lot. It was 3.25% 52 weeks ago. So Bitcoin, of course, has been rallying on the idea that maybe between BlackRock and some other big players, they will be able to push a spot ETF through, despite Gary the Hack Gensler's protestations against it. We shall see, but obviously there's a lot of optimism, and you can certainly see how that has carried Bitcoin higher by some 46%, while the TLT has fallen by over 21%. All right, let's take a look at a couple trades we told you about. Just 2 days ago, we told you about the IWM. And when we cited this unusual activity in the IWM, it was trading $172.50 or thereabouts. Well, the Russell 2000 IWM ETF has fallen by over $5 since then. It's down another 0.75% today. So as you might imagine, our at-the-money puts, those 172s, are doing pretty well as the stock falls down to 167, because those 172s are now, of course, about $5 in the money, no longer out of the money. And the December 164s are picking up speed as well. I don't know that either of us need to think about hedging yet, but because of that plunge protection team and the way we go down and then up and then down and then up a little and so forth, it might not be a bad idea to either pull some off the table, some of your profits, or start selling some downside puts against it. Again, I can't pull the trigger for you, and technically I can't tell you what to do, but I can tell you that 42 years of experience tells me selling a little against what I own is a good idea. All right, let's take a look also at SoFi, because just yesterday we cited this one on the show, 3 at 3, and SoFi was trading $77.87. That is $7.87. They bought 2.5 million share equivalent of the short by buying puts at the November 7 strike. That's the 3rd of November expiration, 7 puts. Well, that's worked out pretty well. And the stock has dropped by about 50 cents. So how much did those puts move? Let's take a look. Next slide. There it is. They've moved up to 48 cents already from that 28-cent purchase. So let's say that you bought 10 of these puts. Each put's $28, so you invested $280. You now have $480 in that same account from this one trade. Now, that's not a $480 profit. That's a $20 profit, or 20 times 10, $200 profit on the trade. But it's working out pretty well. Now, imagine if you're somebody who trades 100 lot and so forth. It's a very good day. And you have a lot of time still between now and November, but I'm already selling some puts against the puts that I own, because that's what I like to do. When I own a put here and the market goes down, I want to sell a put there to take advantage of that market movement. Second, this is the first of our trades of today, and it is Blue, which is a biotech. And BLUE, they bought 2,000 of the November 3.5 calls. Cheap shot, somebody betting that maybe we get a pop between now and November out of Bluebird Bio. And if we do, of course, these calls could do just like those SoFi calls have done. However, I'm buying the 3 calls because 3.5 calls too far out of the money for me. So I'm buying the 3 calls in the hopes of selling something, the 3.5s or even 4s against it, and basically owning that upside for 0 if I get lucky and the market rallies here. And if it doesn't, I will have cut into my time decay as well as the directional bias that I have on the trade. Second trade, take a look at ADM, Archer, Daniels, Midland. I think you know what they do. They're solidly in the ag space. Well, midday today, somebody came in with the stock at 73.50 or thereabouts and bought 15,000 of the 70 puts. Now, again, this is an out of the money put, because with stock at 73, somebody's buying the right to sell it at 70. I like buying at the money and selling downside puts against it, as you know. So what my trade was is buying those at the money puts and selling a downside put 1-to-1. As long as I do it 1-to-1, there's no additional risk to the trade. And I could turn a 50-cent investment or whatever into a buck, $1.50, and so forth. In other words, I could double or triple my money potentially on a trade like this. And I've defined my risk on entry. It's not the same as shorting the stock. Third and final is Polaris. Now, you guys are probably familiar with what the company does, but just for those of you who aren't, they make snowmobiles, they make watercraft and so forth. So now you're probably thinking, oh yeah, Sea-Doos, Kawasaki's, Polaris, yes. So PII, bearish put buying, stock's basically 94 bucks. They're buying the Jan 90 puts. Now, could they be buying these because the financing that many people do for these vehicles has gone through the roof? Perhaps. Could they announce that the sales have slowed or that the parts are more expensive? A whole host of things. Yeah, all of that could play into this. Somebody bought 3,000 January 90 puts. That's the right to sell the stock at 90 with the stock at 94. Yeah, again, I like buying the at the money and then as it starts to drop, selling an out of the money against it. So that's the way I would play that trade along with the other 2 trades. Well, folks, I appreciate you joining us as always. All of us on the team at Market Rebellion wish you a very happy and safe weekend here. If you'd like to check out some of our offerings, marketrebellion.com/get started is where you could go. That's marketrebellion.com/get started. And you can learn more about stock, options, futures, pretty much anything that trades at marketrebellion.com/get started. And all the subscription products that we have are also in that same area. So go check it out at Market Rebellion. Thank you, folks. Have a great weekend. See you Monday.